minimize it, but it is just today's trade pick. It was originally on the Dream Trades list, but I like the range it's been in for a year. I'll show you all that in just a few minutes, so hang around. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a big trading range on Amneal Pharmaceuticals Inc., or AMRX, on the New York Stock Exchange. We will take a look at that, but first we've got some active trades. Then later on, Tim's trading maxim, and we'll also look at our active dream trades. Once again, happy Monday, guys. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's have a look at the active trades. Silver. Still got it locked in right here at break even. 24.7185. And we're still waiting for the parabolic SAR to get down here to start trailing stops on this. Well, gold closed back in the triangle right here on Thursday, so I shut the trade down for a 1.6% overall account loss. And that's good because on Friday you can see that it would have hit our stop loss, and we would have taken a full 2% loss on this one. So I'm done with gold for right now. Bitcoin keeps pushing down here and testing this triangle, still closing above the triangle though. And then Sunday we had a nice candle. Remember, Bitcoin trades all weekend. I'm still on this, and I think we'll see a pop this week. And lastly, Beyond Meat is doing this wacko thing right here. You see it gapped up here, it gapped back down here. It covered the gap here, it covered that gap here, and now it's sitting right about our entry point. But it has pushed up and is having a little trouble with this 172 level. But that's about 2/3 or 3/4 of the way to our target. So I'm happy with that. We just need to see it break that 172 level. And that's all the active trades for today. Let's take a look at today's trade pick. Amneal Pharmaceuticals Inc. is a pharmaceutical company headquartered in Bridgewater, New Jersey, publicly trading under the symbol AMRX at the New York Stock Exchange. And it's been in this huge range for over a year. Just to be sure everyone's on board with this, a trading range is a consolidation with a strong support level, like this one at 240, and a strong resistance level like this one up at 567. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. And I will take a break of a trading range in either direction. As a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We will buy a daily candle close above the range, or above 567, or we will sell a daily candle close below the range, or below 240. On the breaking candle, we want to see a volume bar here reach up to this volume average or above. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate that percentage by volume, and dividing it by this volume average, you should get 0.75. If you don't get at least that, I would stand aside on the trade. Stop loss will be 1.5 times the ATR, and your first target 1 times the ATR. So let's say, for grins and giggles, this thing breaks out to the downside, and about 15 minutes or so before the close, prepare your sell order right here, look at your ATR, multiply this number by 1.5, measure that distance above the entry. For your stop loss, measure 1 ATR below the entry for your first target, and of course it would be just the opposite if it breaks to the upside. If after entering the trade you get a candle that closes back inside the range, I suggest that we take the loss right then and not wait for it to hit the stop loss, because you saw what happened to gold this week. It went ahead and hit the stop loss anyway, so we reduced our loss by getting out of it early. And of course a break of the range we expect should be explosive and hit the target fairly quickly, and if it doesn't and the momentum goes away, we want to shut the trade down without taking that full stop if possible. When the price hits our first target, we'll close half the position for profit, set the stop loss to break even on the remainder, then we'll just follow the stops on the second half as the price moves in our direction until the market takes us out. Typically I do this with 2 positions. First position has a stop loss and a take profit. That closes automatically when the first target is hit. Second position will only have a stop loss, and that'll be allowed to run. When the first target is hit, I will just move that stop loss to break even on the second position. I'll only risk about 2% of my account on each trade. And that's today's setup on Amneal Pharmaceuticals, Inc. Remember, my intent is to tell you how I manage these trades. If you've got a good trade management plan, use it. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your mind, that's the intent for my trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 59. We don't only win by winning, we win by not losing. That statement seems either patently obvious or very confusing, right? Well, here's what I mean. First thing, when you win a trade, you win. That's pretty straightforward. Then when you say not losing, that's the same as winning, right? That may be true, but not for the purpose of this discussion. So let's say you take 10 trades in a row. And for the sake of this discussion, let's say that the winners are $10 each and the losers are $5 each. If you win 5 of the trades, you've made $50. If you then lose the next 5 trades, you've lost $25, and your net gain is $25. Now, what if you can do something to reduce your loss to $4 on the losers instead of $5? You still make $50 on the winners, but you only lose $20 on the losers for a net gain of $30. You didn't actually win any more trades the second time than the first time, right? You just didn't lose as much. I know all of this is very Captain Obvious and all, but what I'm saying is this. Look for something that will get you out of losers early, if possible. That's why I close trades when they go back into the consolidation. I don't want to take the loss of a full stop if I can make it only a partial loss. So, okay, I realize that I'm playing a little bit with semantics, but the point I need to get across is to do what you can do to keep your losses small. But don't bail out just because something is going against you. Be sure you have a solid set of rules to identify when a trade is likely not going in your direction so that you can get out of it early. Remember our Amneal Pharmaceuticals, Inc. trade plan for today. We're going to buy a daily candle close above the range or above 567, or we'll sell a daily candle close below the range or below 240. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. You'll find a link in the description to the trade management video for more details. Also, remember to sign up for my Trading Picks email list to get early notification of these trading picks. The link is in the description box. Let's take a look at the dream trades. Atlantic Union Bank, or AUB, popped up and hit our stop loss right there on Friday, so we made a cool 5% on this stock and we're done with it. Now, strictly speaking, Arcosa Inc., or ACA, closed 2 cents above the moving average on Friday, but I waited until the last minute on this one, and I just wasn't sure if it was going to close above the moving average or not. And since the volume was really wimpy, it looks like about 50% or so, I just passed on this trade. I'm going to watch this thing this week for a more solid close above the 50. If you bought it, don't worry about it. You're not necessarily wrong, except for the lack of a decent volume spike. I just think this thing is just not quite ready to explode. Now, B2 Gold Corp, or BTG, did the same sort of gymnastics on us on Thursday. It closed 1 cent above the 50 SMA. It had a little bit better volume, looks like maybe 3/4 of the average. I still stood aside on this one because it made that huge wick and closed right near the moving average, and you know, I've said a line is not only a line, it's a zone. So I was just not comfortable that this was clearly a break of the 50 SMA. So once again, if you took it, I'm not sure that you're wrong. I would just let it go and see what happens. And I'm still watching for a solid break on this one as well. Don't miss the Dream Trades segment on Wednesday's videos. Click the link below to find out more about the Dream Trades. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern for my new videos. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. And of course, don't miss the next installment of the Trading Education Series, Wednesday, when we'll be talking about brokers. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I will see you on Wednesday.